following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 5, NASDAQ down 28, S&P's off 5.5, gold contract down $1.20, trading at $12.40 an ounce. Silver down a penny, $15.80 an ounce. Light sweet crude, that's getting smacked around big time, down $2.71, $68.30 a barrel. We get the wide price spread, get volume behind the move again. Good old oil folks wants to get into this 65 to 63 area. It's quite a downdraft. We're at 74 to 75 last week. Notes and bonds. You get the 10-year note down 5 ticks, 120.06. 30-year bond down 15, 145.06. Both of those are pulling back with lighter volume. That 30-year wants that May 30th swing high out there, trading up at that almost that 146 level. King dollar. King dollar is down 230 ticks, trading 94.265. Now, what King dollar had done last week is that it failed at the 95 price point once again. It's been trying to get over that for 6 weeks. Bottom line, you're pulling off, but we're pulling off with light volume. So bottom line, you're going to need more volume in order to get to lower price inside King dollar. The euro is up 30 ticks, trading 117.15 to 1 US dollar. Yen is flat at 112.30 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Let's go to the world of Netflix, because the world of Netflix, folks, bottom line, Netflix is going to be coming out with its numbers at 4:05 this afternoon. We're at $397. You're up $220. If we do take Netflix back just 1 year, this is pretty incredible. Netflix started out a full 12 months ago at $160. Right now, you're almost at $400. If we just bring it back to the beginning of the year, meaning January 1st, we're talking about an equity that went from 200 to 400. 195 to be exact, already hit a high of 423. So it's going to be really intriguing watching what happens out here with Netflix. Will they make it or break it on these numbers? And they're going to be looking for big numbers. Amazon, you just heard Tommy doing the update. Amazon just started their Prime Day. Bottom line, it started at 3 o'clock today. It goes for a day and a half. Amazon's trading up $16. And Jeff Bezos, this is a hard number to really wrap your head around. Jeff Bezos, at approximately these numbers right here, right now has a net worth of $150 billion. Just to give you a context on that, I believe Bloomberg said it's $50 billion over Bill Gates, which is the second largest richest man in the world. So pretty intense, man. You know, they expect to do $3.5 billion in sales in the next 36 hours. Some of the higher volume equities out here, let's take a look at them. We have Bank of America is up $1.14. They came out with numbers this morning, good numbers. We'll go over these bank stocks. Citigroup is up $2. We have Wells Fargo up $1.75. Netflix, as we already said, Freeport McMoran's down 10. Tribune Media, what's going on there? Tribune's down $6, trading $32. We'll go over to Tribune. Let's take a look at this first. This is normally not on our radar. TRCO. Okay, so with Tribune. The low for the year, we're at 31. The high's 46. Oh, this got a real mess. Let's see what's happening here. This went down intraday, too. Let me see this for a second. Yeah, this went down intraday, which is really unusual. So this got blown apart at 11 o'clock this morning. Let's see what's inside here. Okay, so the Federal Communications Chairman questioned the legality of a controversial plan by Sinclair Broadcasting and Tribune to spin off TV stations in order to meet ownership limits, dealing a blow to their planned $3.9 billion merger. There you go. Okay. I have serious concerns about the Sinclair Tribune transaction. Pai, which is the head of the U.S. Federal Communications, he's the chairman, said in his tweet, he sent the question to an administrative hearing judge, something that can delay or even kill the deal. So you talk about getting taken apart. That is one nasty trade on the way down. If we take a look at this on a longer basis, you're breaking a B point, you broke it with volume, your A point is 43. It's 10 bucks. So you're talking about a $28 price projection, and right now you're at 32.17. Big number. Let's go over and take a look at Bank of America. They come out with numbers this morning. So Bank of America right now. Bank of America is trading up $1.17. This has some volume. So it's interesting. So when J.P. Morgan had come out with numbers on Friday, banks couldn't get any traction. Bottom line, Bank of America just might give it for them. You get traction out here. This is this Bank of America is up $1.18. You're doing 98 million shares. This thing looks like it wants to go into 30.41. Right now you're at 29.71. Let's go into J.P. Morgan and see what J.P. Morgan is doing. So J.P. Morgan up 393. This is definitely caught a bid. Also has the juice behind it. J.P. Morgan, yeah, this wants to go now for $1.15. Right now you're at 110.285, 110.28. So this did go after its high volume low, tested it, had light of volume. Bottom line is that these banks want higher price. We go into the XLF and we take a look at the XLF. XLF, you're coming into 73. XLF, different animal. Let's go see what Berkshire is doing. So the XLF has price spread going for it. You have 42 cents, which is a lot for the XLF. Doesn't have the volume behind the move. So let's go look at Berkshire, because Berkshire Hathaway is the largest weighting structure inside. Yeah, that's the one that's slowing it down. So Berkshire doesn't have the volume, doesn't have the price move. Right now, Berkshire is up 64 cents, trading 191. We go over and we take a look at the oil market. Oil market, you talk about fast, furious. Right now, folks, we have unleaded gasoline down 4.5%, 201 unleaded. Nice number for all of us out here. You have the crude running down, monster volume, 500,000, $2.68. That crude contract's going after that, so 63.40. Stay right there, folks. Good on, man. Mr. Steve Rhodes coming back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now are up 12. We get the Nasdaq down 28. S&Ps are up 5.5. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. And folks, as you come over to our website at TFNN, you're going to see Steve right in the top of the carousel, Mastering Probability, the Trader's Edge, 3 essential tools with Steve Rhodes. Steve's going to be doing a free workshop over at Ninja Trader. This is going to be on July 19th. 4:15 Eastern Standard Time. You can just hit that sign up button right there and get right in that workshop. Steve Rhodes, what's going on?
Well, market tops and workshops, as you said. Yeah, this Thursday, 4:15 in the afternoon, I'm doing a workshop called the 3 Essential Tools that I've used that have really created that #1 market timing timer digest accolade that I have received. And all folks have to do, as you say, come over to the homepage at TFNN.com and click on the link in our carousel. And in this case here, because it is a workshop that is done by Ninja Trader, folks, when you click on the link, you're going to see really a couple of different options. The first option at the very top will take you to the Ninja Trader page out there. Now, you do not have to be a Ninja Trader user. And to attend, all you're going to do is just simply give your first, last name, and then an email address. And boom, you're all already into the workshop. What we've also done at TFNN, just to celebrate the #1 ranking that I have, is providing my newsletter service for the next 30 days. Comes with the money-back guarantee for all listeners out there. So it doesn't matter if you've been a subscriber of Mastering Probability in the past. It's opened up for you to do that. And in addition to getting the month worth of the newsletter service, you're going to get my money management workshop, and you're going to also get access to another 60-minute workshop that is called the long short line that every trader needs to know. It's a line I like to refer to affectionately as Stevie's red line. So I'd love to see you, whether it is this Thursday again at 4:15. It's a 30-minute workshop. So, Tom, what they've done is they've kind of taken their workshops and they're trying to use the TED series models out there and just try to keep everything concise in a I love watching those TED little segments. And their background says that most folks have about an 18-minute attention span. And so you've got to get your point and everything across that. So it's going to be a 30-minute workshop with about a 10 to 15-minute question and answer period that I'm doing. And what I'm going to be showing folks there are the different signals that I use that are inside of Mastering Probability. You asked me what was going on, and I said market top. So I've been working and watching the market. So there we are in the process of forming some type of short term. Don't know what the duration is, but I'm just going to call it a short term market top. And it's part of the process that I'll be going through on this coming Thursday. But to give folks an idea of what we're looking at, one of the signals that I use is called the Rhodes Momentum Indicator. And what this does, this chart here shows a 5-hour time frame chart for the NQ. And it's an excellent tool for being able to identify tops and bottoms in the market. So it's a proprietary tool that I've developed. I have programmed it inside of the NinjaTrader application. That's one of the reasons that NinjaTrader is hosting this workshop. And when these signals form, they begin to show at bottoms they start drawing these black diagonal lines. At tops they start drawing black diagonal lines going from lower left to upper right. At the bottom, upper left to lower right out here. And we can see that the last bottom that came in on June 28th, this is looking at the NQ, formed a nice bottom. Subscribers and I went ahead and took a long position in that. We can see that we're getting those. We've been getting these signals, Tom, since last Thursday or Friday.
Okay.
Now, a signal, and you and I, we live in Florida. It's kind of like a weather report. They say it's going to rain out there, but a signal is slightly different than a confirmation. Right now, it's just a signal when I take a look at the NQ. So that's one of the steps, is first to understand that. Another step is taking a look at what I like to call Stevie's red line. That's one of the tools that subscribers to Mastering Probability will get immediate access to when they sign up for the newsletter. Now, they need to do that. Take advantage of that free trial offer, Tom. They have to do it by Thursday. So we've opened it up to anyone that is, whether they've been a subscriber or not. That offer is going to expire. So now is the time to take action. This happens to be a daily time frame chart for the NQ. And the last time that the NQ formed a top was on June 21st. Had a nice pullback. You'll see it has one of those Rhodes Momentum Indicator signals. And right now, we have another one that is in place. We're getting the confirmation. Really all depends upon the close. So we've got another good half hour before we'll see what the actual candle it is. And then what I would like folks to understand is if we get the confirmation, which looks like we will, they should anticipate that the NQ will pull back to 73.11. That's Stevie's red line. So the workshop that is available on their members page, if they sign up for the newsletter service, goes through the entire process of how that line is formed. It's really key level of support and resistance. Another step in that process, I utilize TAS market profiles. Now, this happens to be a 5-hour time frame chart for the Russell 2000. And at 2 p.m., what this did was close below the bottom of its TAS market profile. That profile happened to be a bullish structured box. And what I mean by that is the center line. A box contains 3 lines, a top, a bottom, and then a center. But the center doesn't always mean that that line is in the center. Sometimes in proximity, it's closer to the top or the bottom. In this case here, it was closer to the bottom, which was telling us that it should have been strong support. Should have been meaning 1686. A close below support says there's nothing more bearish than a failed bullish pattern. The Russell 2000 5-hour time frame, if it is the leader out there in beginning to show the market topping, it has given us that signal. Did that at 2 o'clock today. So those are 3 essential tools that have led to my #1 market timing. And what they've done for both myself and subscribers is given us the trust and the confidence to go ahead and utilize those signals to assist us with our trading and investing. And that led me to develop a system that I call Bob. And Bob is nothing more than a system that's able to answer the question in a heartbeat, because folks don't necessarily, many people out there are listening and they don't have the time and the energy necessarily to learn all these tools, but they're looking for the answer. Is it bullish or bearish? Whatever it might be is the instrument that they're trading. And that's what I create this tool here. This also was created with inside the NinjaTrader platform, another reason why they're hosting this. And this in an instant can identify the exact market posture, whether that's bullish or bearish. In this case here, I'm taking a look at several different instruments. I look at the ES Mini on a daily basis, gold, T-bonds, and then I show what's going on inside the index ETFs. And for those that want to beat the S&P 500, it shows what's going on with inside of each sector. over on the right-hand side, Tom, what this does is it shows those Rhodes Momentum Indicator signals. You can see here in the cues on a daily, on a weekly, on a monthly, we've got a topping signal that is forming there. So it's really important. It's a way so that I don't have to look at all hundreds of charts. I can just go to my market analyzer, whether it is take a look at what's going on inside the mining sector, such as this signal here, such as this market analyzer here, or whether I want to just take a look at an overall mixed longer-term portfolio. So I would love to see all of our listeners go ahead and subscribe to Mastering Probability, give it a shot for the next 30 days. Get access to the newsletter, the free workshop on money management, my workshop on my red line, as well as sign up for the Ninja Trader workshop on Thursday from 4:15 to 4:45.
And folks, just come right to the front page of TFNN. You're going to see it right at the top of the carousel. You're going to see Mastering Probability. I'm Mr. Steve Rhodes, Trader's Edge. Hit that red button. Sign up now. Steve, thanks so much. You have a great one, safe one. We look forward to the show tomorrow. We look for the webinar.
Thanks, Up.
No matter
Stay
what
right there,
kind
folks.
of
Come right
trader
back.
you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now up 20, NASDAQ down 27, S&P's off 4.5. If we go inside the Dow Industrials, we take a look at the strength versus the weakness out here, folks. Boeing is going to be the number. Boeing's always the number, but you get Boeing's putting a positive 32 points in. You get J.P. Morgan putting 28, Goldman putting 24, Travelers 9. Taken away from it, Caterpillar negative 18, Johnson & Johnson negative 11, Chevron 11, negative 8, Visa -7, and ExxonMobil -6. We go into the NDX 100. What do we have at the NDX 100? The leaders out here is that you got this is interesting because this is basically the big Amazon down in South America, MELI. That baby is up 17 bucks. That's up 5.5%. You get Cisco up 1.8. Biogen is up 0.9. Taken away from it. Tesla is down 3% or $10. You get Hasbro off 2.4%, off $2.30. Liberty Global rather is down 2%, and then we have Dish Networks, which is also down 2%. We get over and we take a look at Netflix. So this is going to be really. I got to look at Netflix too as to NFLX, as to the weighting structure inside that NDX 100. So Netflix is going to be coming out with the numbers right after the close. And number-wise, let's see what they're looking for. Okay, so let's see what we got here. Okay, so options. Oh, this gets really interesting. The implied option move, folks. If you want to see a move, holy cow, here we go. So the implied option move inside the option market this afternoon is going to be 8.7%. Now, what that means, folks, is this: you get a stock trading at $400. They're looking for a 32-point move up or down. The implied option doesn't tell you where the equity wants to go. It tells you what the option makers, not just makers, everyone that's trading options, it tells you what the spread is on that move, which is pretty wild. That is less. Now check this out. That's less than the historical average. The historical average is 13.3%. So that's pretty wild, man, how this thing is going to shake out. So you get a basically, let's see, you get a downward move of something like 363. You get an upward move of 432. So that is going to be one big baby. Option investors have become more bullish over the past 25 days when taken at face value. Since June 20th, the total call volume open interest has increased 26%, while the put interest has increased by 10. The one-day implied move by options trading is derived from the at-the-money straddle expiring on July 20th. This is where you always got to be really careful inside the option market in general, folks, okay? Because what you're going to see here is this. If I bring up this option chain, and if you're trading options, what ends up happening, you can see we're at 399. And if you're looking at my screen, we have the calls on one side, the puts on the other side. And what you're going to see is that at 399 on these strikes, you're going to see that bottom line is that you are going to have to basically get, if you're on the call side, you're going to have to get a move over $20 just to get in the money. Because what has happened is that right now in the July strike, you get a 397, well, and that's $19. A 400 strike is $17. Bottom line is that, watch how this can go. Let's picture that you're bullish. We'll do both sides. First, you're bullish, and you think that, okay, we're going to basically open up. Let's see, I have to get more strikes here. Let's see. Well, I'm going to keep it right to 422. Let's say that the market's saying that the move is $32. Let's say you get a $22 move. That's still going to cost you another $8.60. So if you bought out of the money at a strike price $22 higher, you're still paying an additional $8. So you can see what that happens. You're paying 30 bucks. So you can see when you have a option and you have a move that is so high, you're paying for it on both sides. So you better make sure that you're not only right, but you got to be right by an exponential number, because the way that is set up, doesn't matter whether you're on the bull side or the bear side. Bottom line is you get 30 bucks on each side just to break even. Pretty wild, actually. The dollar index. Let's take a look at the dollar index. So the dollar index has been trying to take out this 95 for a month and a half. Failed again last week. What we have out here today, you're pulling back, but the volume is dramatically lighter. You're pulling back with 11,000 contracts. You know, bottom line, for lower price, we need a lot more volume. What we have done here is that you got in the lower range. The lower range is 94.500. and we're at 94.250. So we'll see how this shakes out the next couple of days. But right now, each time it goes up into that 95 area, it gives it up. Each time it has come down, excluding last week. What ended up happening last week, oh, actually 2 weeks ago, on the 29th of June, that was the only day that we came off that high, and you had volume on the way down. That was till 94, 195, and then as it got down to 93, bottom line said, see ya, don't want to be ya, I want higher price. So bottom line is that we'll see how that shakes out. And if we don't get the volume, then you can expect good old King Dollar to go higher once again. Get over to the gasoline market. This is what's going to affect us all, and prices are going to be coming down at the pump, folks. If we go back to May 22nd, you're trading at 226, or 20% high, no, 10% higher inside the wholesale gas price. This thing is getting smoked, and it has volume on the move. So when we take a look at how wholesale gas right now, we're going to go after the swing point more than likely tomorrow morning. It's $1.98. If we break that with volume, we're going to be right back where we were 6 months ago at 181. It would be pretty cool, actually, because that will keep the gas prices down for quite some time. ExxonMobil, Chevron still can't get any traction going forward. Goldman, let's go to Goldman Sachs. Goldman Sachs trading at a price point up $4, 230. Not bad, not great. You know, Goldman, bottom line, is going to be going through a succession plan. This is what Goldman did do, is ring the bell at 273, 275 in January and March of this year. Bottom line, you come down. Goldman's trading at the same price that it was trading back in December of 2016. So bottom line is that in that particular case, what we're going to see more than likely is we're going to stay in that consolidation. Amazon, as it's taken in the numbers, I suspect bottom line, we're going to see some big numbers. Let's see what this says here. It said that Amazon, this is going to be bad for their PR, but they took care of it evidently pretty quickly. Amazon website, oh, look at this, has been up and down since the start of Prime Day in the United States at 3 p.m. When online, the website continued to experience issues like links that go nowhere, leaving customers unable to access the special deals. Prime 1 is the Amazon's most important day of the year when it hosts Black Friday. So that is going to be really interesting, folks. Maybe they'll just have, they'll add another day on, but that's a big number, having glitches, particularly because Amazon is not only the biggest retailer out there, it's the biggest cloud computing company also. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Aerobic's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers I use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 38. You got the NASDAQ down 20. S&Ps are off 3. Let's go over to the GDX. Take a look at these gold and silver equities. So GDX out here broke the low of last week. Your high volume low of last week was $21.94. You had 63 million shares traded. We did 15 thus far today. Now, that being said, I'd love to close inside 21.94 today because then that would be a rejection of lower price. What we're also doing is that we're going after the strength, which is the 21.93 number. Bottom line, both of them are important. If we close where we're closing now, that's saying that you can get down to the bottom of this, which is we're right next to. We're only 10 cents away from it. Now, that being said, what you're also doing is that you're actually coming into the strength as we came off the lows in March. When we came off the lows in March of 2018, that's when we did 77 million shares. Bottom line, the low of that is 21.38. So there's lots of support down here. The bottom line is that we've seen the support at these lows. What we haven't seen is a sign of strength inside that market. If we go over to Royal Gold is trying to get up and over its high. Royal Gold last week got up to a price point of $98.53. You're then $9 off that high right now. We take this back and look at it. What you're going to see is that it's been at the top of its range, has been strong. Bottom line is that we never made it to the very top. We made it over the highs that were generated in September. That number was 94.39. We got up to 98.53. So this is one you want to keep your eye on in a huge way. Rango Resources needs help in a huge way. It's pretty amazing watching Rango, how this is. This used to be one of the strongest gold stocks from, let's see, 2005 to almost 2014. Bottom line, actually 2016. Yeah, right up to July of 2016. That being said, bottom line is that you get hammered not only down there. This is coming back into where we went topside in January of 2016. Also coming down, with light volume, but hasn't been able to catch a bid at all. We go now. We had our man Rob McEwen on, and McEwen Mining. This one's going to get really interesting, and this is why. So, when Rob was on, well, for the low of the year is $1.81. The high is 285. The equity last week started pushing into its highs, and we actually had volume. Now, that's in a bad week inside the gold and silver market. This is the equity that had a 19.3% short interest. Now, this is the first time that it's come down in months. It's 18.67. And what that was all about is that the market felt that Rob was going to do a secondary when, in fact, he just did a bond offering. That's something you want to keep your eye on, folks, because that has the characteristics, you know, that if we get gold contract moving at all, you're going to get some real movement inside of this equity. We're going to take a look at the copper market. So this is kind of interesting inside the gold report this week also. Southern copper. So Southern copper, strong like bull, has been. You know, bottom line, you're in a deep retracement right now. When you take a look at this equity in general, though, you know, 2016, you tried at $21. April of this year, at 56. What the Southern Copper has done, as well as Taseko, is come back to its breakout area from December of 2017. Now, the bottom line is that it's rejected it thus far. If we get a sign of strength out of this, then you can expect that we're going to see some action also inside that copper market. If we go over and we take a look at copper for a second, this is going to be really important as the context of what's happening with the tariffs, what's happening with China. You know, what are the effects going to be of real production? Because you can see copper's got absolutely smoked. Copper went down from $3.33 a pound to $2.76. We take a look at this and we put this on a continuous contract. And what you're going to see is that, you know, bottom line is that what we had done is it's a classic counter trend bounce. So what I mean specifically is this. In 2011, copper's at $4.64 a pound. And 2016, you're at 193. We make it right up to ice. We make it up to 344 a pound. Bottom line, 332 it goes. It gives it up. Now you're backing down, and the real question is going to be: is that are you going to stop at? Let me see what kind of retracement this was. Look at that. It was a perfect 50% retracement. Okay, so you did a perfect 50% retracement. And what happens with a 50% retracement, bottom line, that's a normal retracement in a bull or a bear market. So the real question is going to be, does it get a sign of strength out of here? Because what we also have with the copper market is this, is that this is, you know, this is coming back into, it had monster strength in November of 2016. That's when we went from 219 to 274. I suspect what that's going to do, let's go to Taseko, 2GB for a second, just so you can see both of these are big copper stocks acting the same way. Taseko's only $1 stock, but the bottom line is that they do have a lot of copper. And what I want you to wrap your head around more than anything is that that also is coming right back to the January 2017 break topside. That's when Taseko went from 44 cents and made the run to $2.45. So big numbers as to what we can expect inside that copper market. If we go over to Valley and we take a look at the iron ore market, this is what you have happening in the iron ore market. That's trading at $13. Now, this is one of the largest producers of iron ore, and it's all about steel. This may have basically, we pulled back. It looks to me like this thing wants higher price. It's been basically setting up for quite a while. Last high out there is $15. That was generated May 18th. We pull back, have lighter volume. This looks like it's setting up for higher price again. So when you take both of those into consideration, it's going to be like, okay, how far are the metals going to go? And are the metals going to be basically a barometer inside the Taft issues? We'll find out, and we're going to find out pretty quick. That's the way this seems to be setting up right now. We take a look at the banking structure. Bottom line, the banks come off the lows. They have some juice underneath them. If we go to Caterpillar and take a look at Caterpillar. Now, Caterpillar is one of the largest movers inside the NDX on the negative side today. Caterpillar is trading at $138. And this baby here, let's see. So you got 24 million. Yeah, it's not an ABC down, but let me tell you something. It's a little dangerous. What's holding Caterpillar up is October of 2017. That's where it had some strength. And we'll see whether it can get back inside. Caterpillar has to get back inside $142. Stay right there, folks. We'll be coming right back. And, of course, after the close, right at 4:05, we get Netflix coming out. To recap right now, we get the Dow up 36. NASDAQ is down 21. S&Ps are off 3.5. We're coming back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go take a look at Pan American Silver. So Pan American Silver, folks, silver stock had a huge expansion topside and then just gave it up. This baby was trading up at 1875. May 11th, it broke topside, has the volume on the break. Now what you have in a week, we went from 1840 down to 16. Okay, so what you're doing here, you broke topside, you had the volume behind the move, finished an ABC structure on the way up. Now what you're doing is that you're coming back into that $16.17. Now what you're going to be looking for on a weekly basis, so last week we did 6 million, and you're coming into 7.7. So I expect what you're going to see here, we're going to do actually less than even last week. And if that's what you have, then you're okay. That's the bottom line. Pretty intense move, though. There's no doubt about that. Pan American Silver, they come out with the numbers on August 8th. And this is when you actually do look at something like this, when they finish their ABC structures up. You basically want to be all over it. So your A point on this was almost $15. Your C was $17.50, $2.50. Your C was like 16, which is $18.50, and we basically hit $18.75. When you finish an ABC structure on the way up or on the way down, most times they do something different. In this case, that did something different very, very quickly. As long as you're pulling back into that strength where the high volume was, bottom line doesn't mean it can't do it right over again. If we actually go to First Majestic and take a look at First Majestic, that had kind of the same setup. Now, that didn't get smoked on the way down. First Majestic has gone from $5.42 6 months ago up to $8.48. You're trading at the $7.43. That looks like it wants to get into like the $7.38, $7.20 area. Stay right there, folks. We're going to be coming back with numbers after the close. Lots of numbers. We are in earnings seasons, and this week is going to be a big one. Dow Industrials right now up 34. NASDAQ down 23. S&P's off 4. Coming right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. let's start right off with Netflix. So Netflix, folks, out here, it closed at $400, and bottom line is it just came out with the numbers, and we are trading at $357. The amazing part about that is, if you listen to the first part of the program, the option market had applied 8% move. So big number. It did the 8% move, and here's where the numbers go. New streaming add-ons, they expected to do 6.27 million. They did 5.1. So the bottom line is that that's a decent miss. There's no doubt about that. We'll get you more on Netflix as those babies come across. No two ways about that. But bottom line is that you are taking a hit out here, and now we're down $46. So at 354. Let's just see where we're at 354. The high volume, I should have, no. June 25th, you have a high volume low. It's blowing that away. That's 378. 350 is at, okay, so 350 is your breakout from May 23rd. That's where that baby is. Now, that's going to be problematic for the chart. And the reason being, folks, is this. If we take a look at this, what you're going to see is that this was a one-way move on the way up, and what it looks like you're going to have is that we're going to have a break with conviction on that trend line that started all the way back at $216. That is a number, and that would mean that you just have to get below. Oh, it's getting below that for sure. Well, 360. Below 360, that's how that baby is shaking out. And right now, you're at 353. And bottom line is that that's going to be some problems out there. So let's go take a look at the rest of the market out here. We had the Dow Industrials finish up. They got some juice coming into the close. That was up $44. NASDAQ down 20. S&P's up 4.5. The NDX 100, that just got smoked. The NDX 100 was only down 20. Right now, you're down 60. And don't forget, folks, as we come into earnings season, you can always trade those volatility trades inside of the Nadex platform, particularly when you get a high flyer like Netflix, Amazon, Google, as long as they come out before 4:15. And bottom line, in that particular case, you are not looking for a direction, you're just looking for volatility. And if we go take a look at the NQs, what you're going to see is that you certainly got that going in a huge way out here. So if you happen to be watching Tiger TV, I'll bring this up, and what you're going to see is that this dive is pretty extensive. We closed out at the 4 o'clock mark. We were trading at the 73.78. Right now, you're at 73.30. You basically gave it back, and you gave it back with some big volume. So what that's going to do is that's going to, number one, get you off the high, and number two, what it's going to do is get you back inside the lower range that we just broke out from last Thursday. So bottom line is that what that sets up, by the way, too, is now that sets up a 69.56. Can't bust them up. Guess what? You're going to try to bust them down. Gold contract flat, $1,241. Gold still hasn't caught a bid. Silver also hasn't caught a bid, $15.81. Oil, they took apart. Oil is down $2.92, trading $68.09. If we go inside the commodity market, what you're going to see out here is that unleaded gas, guess what? At the pump, folks, are going to be having prices coming down. The gasoline today was down 4.7%, big number. That was down 9 pennies. So you have unleaded right now trading at $2 wholesale a gallon. And the way that this is set up right now, this basically is going after its lowest swing point. The lowest swing point is $1.98. What I expect you're going to see there, it wants to take it out and get it into 181. That'll bring us prices back to where we were 6 months ago. So that's going to give a little relief at the pumps. Notes and bonds. 10-year note down 5 ticks, 120.05. 30-year bond down 16, 145.06. If we go take a look at the 10-year first, see how this 10-year is set up. You know, the 10-year has been building cause for higher price. That did it again today. So check it out. These bonds, folks, have been indicating since May 17th that they want higher price, lower yield, and guess what? If They want higher price, lower yield. This market is like a razor blade. Okay, the highs were generated in January of this year, hasn't got to the highs, and it looks like a slow bleed on the way down. Now, the NDX 100, NASDAQ, yes, went to new all-time highs. Dow Industrials, S&Ps can't handle it. This 10-year note is basically saying it wants to get up into May 20th. The May 20th high out here is 121.03. We back down today with 818,000 contracts. Now, we have summer trading, granted. Monday and Friday is light. But guess what? Bottom line, you're backing into 1.5 million contracts. You're backing down. You have tremendously lighter volume. That's saying it wants higher price. We get over and we take a look at the 30-year bond, and the 30-year bond is saying the exact same thing. 30-year bond came down today to 144.23. We closed out at 145.06. We did volume of 230,000 contracts, and that's going into 266. The 30-year, by the way, is right next to the May 30th high. The May 30th high in the 30s is 145.28. You break topside on that baby, that is going to bring you up to 145. That's $6. That's going to bring you up to the 148 level. Big number. Big number and lower yield. Inside the 10-year right now, today, 2.855. That's the number, 2.855. Let's just go over to Netflix for another quick second. Yeah, Netflix has some heavy. So Netflix end up with twice the move of the applied options after the close. We're at 345. The implied move was $32 either up or $32 down. Bottom line, right now it's $60 or $55 down. Monster number. Stay right there, folks. We'll be coming back with more numbers. Our phone number is 877-927-6648. The Dow Industrials finished up 44. NASDAQ down 20. S&P's NDX 100 toasted. It's down 67. Currently.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished up 44, Nasdaq down 20, S&P's off 6. You will have the, we'll see how it shakes out in the morning, but the NDX 100 is down 68 right now, and that's all about Netflix. So Netflix, folks, bottom line, trading at down $50 off the close. It had been up about $5, trading $348 right now. And let's take a look at what they're having to say here. So a snapshot goes like this. Their operating income basically is in line, $462 million. Their margin for this quarter came down a bit. The first quarter margin was 12.1%. The margin this quarter is 11.8%. They expect the year forecast to be at 10.5%. Net income, $384 million for the year. They expect $307. So they expect a few losses coming forward. Earnings per share, 85 cents for the year. They expect 68. Year-over-year revenue growth, they're still okay. So this is going to be interesting to see how this shakes out. If we take a look at from 2017 going to 2018, this is the first quarter that the revenue growth is actually going down. The first quarter was 43.2%. They did 42.8%. Their paid memberships are 100. That went up. Additions went up. Total membership went up. Not dramatically though. We went up from 125 million to 130 million. So it looks like, yeah, net additions were 5 million. They're looking at the Netflix overseas growth means it's exposed to fluctuations in non-U.S. currencies. When currency movements are rapid, they will affect our near-term operating margins. Reed Hastings said, for 2018, charges in the foreign currency rates mean Netflix operating margin will be near the lower end of our 10 to 11% target range. See, that's going to be... Currency fluctuations are always a huge problem, folks. And what has happened inside the currency arena, and we don't see it as much, like if I bring up the dollar index, let me bring this up and show you something for a second, because when you bring up the dollar index, you know, the dollar index has been on a nice ride. Bottom line is that, you know, if we bring this back to April, dollar index is at 88. Well, we're at 94. Okay, so nice move, right? Inside other currencies, right, what the dollar is going against, it is dramatic. Okay, you know, whether you bring up Argentina, whether you bring up Brazil, whether you bring up Chile, whether you bring up Mexico, a lot of these you can see. You know, bottom line is that the Argentina one, forget it, man. We went from 18 pesos to $1 US to 27. Well, guess what? If you're in Argentina, he's selling product in Argentina. Bottom line, what does that mean? Well, he's collecting pesos, he has to turn them back into dollars, by the way. He doesn't have to turn them back into dollars, but he has to give the equivalent of dollars because he is reporting in US dollars. Netflix is reporting in US dollars. So that fluctuation is going to hit his margins. That's how this shakes out. So when the balance sheet comes down, bottom line, you're going to see that as a problem. And hey, we'll see where the rest of it shakes out. Let's go over and take a look at Amazon. Amazon started their Prime out here today. It was started at 3 o'clock. They had a couple glitches. The last that was reported when they started it. Amazon closed at $1,822. Netflix comes out with the number. They slam Amazon too. Amazon had been up $9. Amazon's trading $18.03 right now, and bottom line, I expect what we're going to see is, what's going to be interesting. This came down on the aspect of Netflix coming out with numbers. Bottom line is that they're going to have their own problems on top of that, because what you did have, as Amazon kicked off its big Prime Day, they had technical glitches, which was threatening their extravaganza. Trouble on the site spiked when the event began at 3 p.m. Amazon did not immediately respond. Shoppers took their frustration to sites like Facebook and Twitter, and we'll see exactly how that shakes out. What I expect, hey, we'll see how that shakes out. Let's go over to Google and take a look at Google, and let's see if Netflix is taking them all south. That Netflix is taking them all south. Look at this. So Google closed at 1183. That's trading at 1170. It's going to be surprising if they took Microsoft too. Let me see Microsoft. They're selling them all. Microsoft closed at $104.91. That's trading at 104.46. Let's see. Oh, Facebook. We go to Facebook. Facebook closed at 207. It's trading 205. So bottom line is that Netflix by itself took those FANG stocks, took them south. What you're going to see inside the NDX 100, we're closing to, we'll open back up another half hour. Bottom line is that you can expect more pressure inside that NDX 100. We go take a look at the 3Qs, what the 3Qs did out here today. So the 3Qs got to a new high, got to 179.95. Yep, 5 cents over the high, and guess what? Had no juice whatsoever. And right now, the Qs are trading at 177.98. So you're down $1.20. What you're going to see here also is you're going to see an explosion in volume once again. So you can expect these Qs are going to be right back down to the June 28th area, which is 171. You're at 179. And if, in fact, that's what we do, once you get back inside 175, you know it's game, folks. Which hasn't been tested, guess what? February 9th. Inside the Qs, this would be a disaster. 150's hanging out there. And 150 wasn't tested. Let me just see where, I don't even know if Netflix had a high volume low on February 9th. They all seem to do. February, oh my God. Yeah. So check this out. This is pretty sick. The February 9th, Netflix is at 255. And that's basically a high volume low. It would definitely have to get by, though, first. It has strength on the 17th of April. 17th of April at 388. This is going to be some major disaster, though, in a lot of portfolios out here. When you lose basically 15% overnight in an equity, it's problems in paradise. Some of the higher volume equities out here, let's go take a look. Actually, let's go take a look at the commodity market first. So inside the commodity market, what we had out here today, you had gasoline was the largest mover down, 4.7%. Cocoa, 4.2%. Crude was down 4%. Heating oil was down 3.6%. Lean hogs down 2.3%. You had wheat off 1.7%. Copper was flat. Gold was flat. Natural gas up 0.5%, live cattle up 1%, soybeans were up 1.3%, and sugar was up 1.6%. The ones that are really going to affect us on a continual basis here are going to be the gasoline. Bottom line, there we go. The gasoline, unleaded gasoline, folks, looks to me like it wants to go down to 181 once again. Now we were at 181. Last 5 months ago. 877-927-6648. Give us a call, folks. Netflix trading out at 347. Netflix, huge problems, folks. Bottom line is that they sell it and they sell it down quick. Come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Give us a call, folks. I want to know what's going on in y'all world. Let's go to the world of Vista Gold. So we take a look at Vista. Vista Gold out here, folks, is an exploration stock. We do happen to own it inside the Gold Report. The low is 59 cents for the past year. The high is 92. It's trading at 60 cents. And what you can see out here is that last Friday, this thing goes south. Goes south with volume, too. That being said, what is happening is this. Let's go bring this back, because we take this back, and unfortunately, this is how Vista does trade. But bottom line is that what we're going into is the 60 cents going all the way back from the first week of December. That was the swing low there. Also, actually, and then we're coming into the strength that it had in April of 2016. So that would be bottom line what you have happening right here. The danger, because that's where I got a question about, it looks like it may be in trouble. The danger, no doubt, is that as this fades away, the real question is, does it actually go back into where it took off from in April of 2016, which is problematic, no doubt. That's 44 cents. And then more problematic, you have 31 cents that is down there on February of 2016. So that's how that baby's set up. On the bearish side, on the bullish side, guess what? You have a high volume spike out here at 209. That's the first one. It gets even heavier than that, because when you bring this back, what you're going to see out here is that you got another high volume spike out there at 450. So When you take this on a monthly basis, what you're going to see is that you're kind of back where we took off from, but that's not going to help any of us if we're at 44 cents and right now you're at 60 cents. So their mine, folks, is in Australia. And if we do go over and we take a look at the Aussie dollar, because they're getting close to basically getting that mine ready, meaning 2 or 3 more years, that thing will start pumping it out. When you take a look at the Aussie dollar, it's important to know where the Aussie dollar is. Right now, that thing is strong. With 74 to $1. It's been as high as 81. If we take a look at this and we bring this back, what you're going to see here, whoops, let's do it this way. We take this, and what you're going to see, the Aussie dollar, the range, well, in 2008, we went to 60 cents. We got all the way up to $1.10 and 0.11, and right now we're at the 74. So bottom line is that, yes, we do want buyers in there. It's always an equity that basically has a personality. When it goes either way, it really goes. NQs right now, the NQs are off 75 bucks. These things are going to get smoked, man. This is going to be a big number. The ES, we take a look at the, let's just go take a look at the SPY. So the SPY closed at 279.34. That's down another, so it's down 25 cents. The SPY's down another 40 cents after the close. And as I just brought up a bunch of other equities, other FANG equities, folks, you see that Netflix basically took them all down, because, of course, the question is going to be if Netflix basically is slowing down, what's going to happen with the other ones? What you're also going to have is that this is what also happens. Now, this is important to wrap your head around. So let's go over to Netflix for a second. So you get a portfolio. You've been making some really good money in all the equities, because the bottom line is that we've gone sideways since January, except the NDX 100 and the NASDAQ. What have they done? They've gone topside in a huge way, right? Okay. So there's plenty of traders that are in those FANG stocks, plenty of portfolios that are in those FANG stocks. What's going to happen immediately is that all of a sudden in Netflix, the hit is extraordinary. So let's just go look at who the big players are in Netflix. So we're going to, so your biggest player out here is American Capital. That's a huge fund company, great fund company. Vanguard's next, BlackRock's next, Fidelity's next, right? Okay, so all these companies out here, you know, American Capital has 49 million shares, Vanguard 29 million, BlackRock 26. You start getting down into some actually just regular funds. Bottom line, the hit's going to be extraordinary. All you have to do is just multiply $50 times the amount of shares they have. Then what you're going to see is this. You got to remember something, that money managers basically are in the business to make the most amount of money for their clients. If they're in the Index 100, if they're in the NASDAQ, they've had a great year. The S&P is down for the year. The Dow is down for the year. So then the question is going to be, oh, man, I got to get out of Amazon. I got to get out of Google. I got to get out of Facebook. Okay, I will take what I have because it's still July 16th. I could skate the rest of the year. If the market's going to pull back, we did fine. Get more in cash. And what you're going to see, if this is the case, what you're going to see is this. You're going to see the NDX 100 get probably come down. It's the way the NQs work, folks. Okay, you can be down 150 bucks tomorrow, easy. That's when they go south in a huge way, because they just throw the babies out. Doesn't matter if it's a good baby, bad baby. They throw them all at the same time. If you get that, you're gonna have the S&Ps down. You're gonna have the note and bond market up very quickly. And if that's what you get, you can expect more expansion on the way down, and you can expect that to happen very, very quickly. That's how that's going to basically shake out, because then it'll be who can get out of the gate the quickest. You know, Bottom line is that Amazon right now, let's just see, that's only down $30. Google's off $13. That's not the end of the world. Facebook is off too. What has happened is that Facebook has been the most resilient. Each and every time, bottom line is that we gotta pull back. Facebook just doesn't move. So we'll see where that does shake out. But you're going to see a lot of selling inside of that. I'd say it's just protective selling, that they're saying, hey, listen, man, I'm good where we're at. These equities are up pretty dramatically. Now, let me swap gears on you because First Majestic just come out with numbers. So let's see what they have to say. First Majestic is a silver company. That closed at $7.43. This is trading right now at $7.50. That's good. Let's see what they have to say. So First Majestic, okay, total production second quarter from its 7 operating silver mines reached 5.1 million equivalent ounces of silver. Total production consisted of 2.8 million ounces of silver, 25,000 ounces of gold, 3.9 million pounds of lead, and 1 million pounds of zinc. So what happens, folks, is that when you're a silver company, they take the gold and put it into silver ounces. They take the pounds of lead, put it into silver ounces. They take the zinc and put it into silver ounces. That's where you get that number, 5.1 million equivalent ounces of silver. It increased its 2018 silver production to a new range of 12 to 13.2 million ounces, 20 to 22.6 million silver equivalent ounces, primarily due to the addition of San Damiano's silver gold mine, which was acquired on May 10th. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers now use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com, and request requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow finished up 44. Nasdaq was down 20. S&P's off 6. News after the close, of course. It's all about Netflix right now, folks. Netflix is bottom line taking down the rest of the FANG stocks down. Netflix closed at 400. It's trading at 343. And let's just see what else they're saying out here. Let's see. So you got anyway here you got an analyst saying that Netflix and Tesla both qualify as bubble stocks. Netflix missed on subscriber raised question why its forecast not more accurate. Hastings' letter to shareholders says we strive for accuracy, but warns that some quarters will still be high and other quarters low relative to our guidance. Netflix fastest growing expense right now isn't programming, it's marketing. Netflix spent $527 million on marketing in the last quarter, nearly double the sum from a year ago. Look at that. Wow. $527 million in 90 days on marketing. That's quite a number. So what Netflix did do to the other FANG stocks after the closeout here, it pushed Amazon down 1.1%, Apple 0.4%, Google 1.5%. And Netflix is down 13% right now. Let's see what else we got. Netflix is burning cash as it expands its content offering. Free cash flow in the second quarter totaled $559 million versus $608 in the quarter of the year before. We anticipate free cash flow of $3 to $4 billion for the full year of 2018. They raised money at the right time. Bottom line is that they raised it before this number came out. Okay, so now Tommy and I have been talking about this in the morning show. The Netflix view of the world. YouTube is our major competitor. HBO and Disney are evolving. Okay, so this is going to get interesting. YouTube and Netflix, two leading global ex-China internet entertainment services. HBO and Disney are evolving to focus on internet entertainment services. Amazon and Apple are also investing in content as part of a larger ecosystem subscriptions. Each of these firms have unique content, striving to find the best creators from around the world to entertain viewers. There's never been a better time to be a creator of content, and consumer of content. What has happened now. This is a good part for them. Is that the Netflix streaming revenue overseas has now surpassed domestic revenue. Overseas is just it looks like it's hitting about $2 billion. Netflix bonds are also trading down. They're just trading down 2 cents on the dollar. So bottom line is that they have their work cut out for them now. And we haven't traded down like this in Netflix. This is how Netflix used to trade years ago. Let me bring this back so I can show you. Because this stock, you talk about volatility. This had the volatility, but it was been a one-way trade since April of this year. So picture, in March you're at 333. Then we went down to 271. So you're down $50 or 15%. And then it never looked back to over $400. Prior to that, though, you'd see Netflix go. Here's one in July of 2017. It went from $191 in July down to $164. That's $30. Same deal. It looks like 15% is the type of hit that it likes to take. In 2015, we went from 133 in December down to 79. That's that's $50. That's 30%. Yeah. That's over 30%. That was the last monster hit that they actually took. February of 2016. And what we do have, if we put this on a monthly, yeah, see, on a monthly, it's a problem. On a monthly, this might actually go down as a classic, folks. And what the classic would be is that, yeah, you do a rocket ship on the way up. You know, you put this on a monthly. July, just 2 years ago, Netflix is $84.50. And this had an extension, and guess what? Didn't have volume on the whole move higher. And this just might be, you know, basically a classic of an implosion. You get down lower, and I suspect what is going to be is this. It's not going to be that Netflix is not a great company. It's going to be, as Tommy and I have been talking about, is that you have Amazon coming in the market, you have Disney coming in the market, you have Comcast coming in the market, we have Hulu coming in the market. Most of these are already in the market, but I think what it is that we all are getting used to basically streaming on our phones. You know, we can tell we're in the process right now of making another full website that is definitely much user-friendly on the phones. And bottom line is that why? Because streaming is where it's at. That's where our business is. That's phones, basically. That's what everyone's streaming with, looking at tablets. That's where this whole deal is going. And what tends to happen is this. I remember when we first started streaming, and we were one of the first streamers on broadcast.com, and I'm going back to 1996, 1995. What happens, it's very hard for all of us to get used to that you can actually, you know, we always looked at the TV. Okay, so you look at the TV that, oh, you just do ABC, NBC, CBS, right? Over the course of years, that has got easier. Well, it's always been easy for the last 15 years to just turn around. Let's say for the last 10 years, internet TVs go on, bang, you hit TFNN on your TV, no problem. But guess what? You got to get used to using your TV as the internet. Now, once you do, you'll be really surprised. If you haven't done it on your TV yet and you have an internet TV, put TFNN, folks. It'll blow your mind. The digital output is amazing, and the charts are amazing. It all comes across great. That being said, I've seen the transformation, even in myself, of I use my devices much more now versus just a CBS, NBC. I'm always on the internet, on the TVs at home. You just click, click. It's not even actually the correlation of a TV, because the correlation of a TV to me is still network TV, and it's not anymore. That's what it really comes down to. And it seems that the longer that we are out here using this, and I'm talking about even my demographic, never mind a younger demographic. Younger demographic, they don't even watch TV. They don't even know what CBS is. It's just not there. And it won't be there. You know, they're on a whole different scale. And that is what actually may hit their growth aspects. And looking at the amount of money that they actually just put in marketing, they're worrying about that, you know, because they accelerated that marketing in a huge way versus the content, because they have a lot of great content. 877-927-6648. We had the Dow finish up 44, NASDAQ down 20, S&P's down 6. What we will see, bottom line is that overnight out here, you're going to see some selling inside this NDX 100, inside this NASDAQ. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Coinbase, that's a cryptocurrency site. They said they just got the green light, folks, from the U.S. watchdogs to move forward with the trio of acquisitions that will allow it to become the first federally regulated venue for trading digital coins deemed to be securities. The U.S. Securities and Exchange Commission and the Financial Industry Regulatory Authority approved Coinbase's purchase of Keystone Capital Corporation, Marketplace, and Digital Wealth LLC. A company said Monday the acquisitions enable the firm to offer so-called security tokens and also place the business under federal oversight. Coinbase has primarily been regulated by a patchwork of state regulators. That's going to be quite a trip, man. That's going to be. So we'll see what happens with Gemini. So Gemini, folks, is out there also as a crypto exchange. That's the Winklevoss twins that had a piece of Facebook when that baby started. So we're gonna see some action inside that token market, particularly if what you have now is that is going to be regulated. Bitcoin out here today, that closed up 479 at 66.64. Stay tuned for tonight, folks, because bottom line is that you're going to get some action out here. And the real question is going to be, did Netflix, as one of our tigers was just telling me, pop the balloon inside the NDX 100 as well as the NASDAQ? Thus far, looking at a few of these stocks, it looks to me it's going to be kind of a rough night out here. You got to remember something, that the NDX 100 is weighted to 5 to 6 stocks. Those 5 to 6 stocks right now, folks, basically are down, and they're down pretty good. Google, which came back in a huge way, that baby's down $13. Not that it's a huge amount, but if you get that selling that's starting to accelerate, as I said a little bit earlier, inside those portfolios are lined up. Many of those money managers are lined up that they have them all. That's why they've done so well. Guess what? When the momentum goes the other way, which it already has, after the market close, that's really a problem, because then how do you get out? The way that they're going to get out is they're going to be selling the NQ futures as soon as these babies open, so they can get delta neutral out here tomorrow. Have a great night, safe night, folks. Look forward to speaking tomorrow, 8 o'clock. Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.